Hello, everyone. I want to thank you for taking time out of your day to join us as we go over our exciting suite of Market Synergy Group products. These products feature industry-leading rates, bonuses with innovative features, and by the end of the seminar, I'm sure you'll want to have them in your arsenal as we go forward. I am joined by Jared Anderson today from Market Synergy Group, and he'll be presenting on that suite of products. Before we get that presentation going, I do have a few things to talk to you about with IAMS and over here. So the first thing is we will have questions and the ability to answer those questions here for you at the end of the presentation. So as questions come up, please pop them in there. Don't wait until the end, but go ahead and throw them in there. And we'll definitely get those answered for you. We'll also have a couple polls throughout the webinar, so we'd love for you to be interactive with that. All right, now the first thing about us over here at IAMS is we really pride ourselves in customer service. We do answer all of the phones with a live person, so you're never going to have to deal with a dial-by-name directory. When you give us a call at 800-255-5055, we will have a live person answer that phone, and we try to get to you within 2 rings or less. Next, when you come and work with us, we've got a lot of great reasons why you would want to come work with us. Our new producer builders are for those of you who are new to IAMS. These bonuses are available based on your production level in your first 6 months of contracting with us. As you can see, we have great levels there. We've got business building tools, personal perks, and even cash rewards. So whether you want to have a little bit of extra cash or you want to reinvest in your business, this is a great program for you. I do have a group that achieved the $1 million level, and they're going to be doing 3 of our Safe Money seminars as part of their business builder. So if you don't know where you're at on that level, give one of the annuity or life sales directors a call over here, and we'll tell you exactly where you're at on that. Moving on to our business builder programs, we're going to our referred producer program. We do have thousands of dollars of checks that go out every single quarter. How we get those checks are every time you refer a producer to us, we're going to cut you a $50 thank you check. Then when the real money comes in is when that referral writes business. You receive an override on that business. Our ownership team, Charles, Steve, Curtis, and Chris, sign checks for thousands of dollars every quarter. If you can think of anyone that would benefit from doing business with our team at IAMS, please send me an email with their contact information at timw@iamsinc.com, or you can put that information in the questions box here on this webinar, and I will reach back out to them after this one concludes. Below that is our marketing reimbursement program, which is a very popular program for us. For every $100,000 in fixed index annuity premium, you get $100 in your marketing reimbursement account. Why this is so popular is we truly do consider this to be your money. So we don't cap your account, mandate where you have to spend the funds, or tell you when you have to cash the account in. It's truly your marketing reimbursement. So whether you're utilizing that with our in-house creative team or utilizing that with one of the marketing programs that we have here at IAMS or something outside of IAMS, it's truly your funds. If you're curious on what your reimbursement balance is, give one of the sales directors a call and we'll help you out with that. Back office support, this is another way that we add value to your business. This is the core of how IAMS and Charles Hearing founded us over 36 years ago. We want to help the independent advisor, you, work smarter, not harder. We are going to do that with great business building tools and resources. Of course, advanced case design assistance, life and annuity quotes, we will get those to you and guaranteed in 24 hours. But for those agents that have worked with us in the past, typically that's going to be an hour or 2, unless it's just a complicated one. Submission to commission support is handled by our new business team. Amber heads up the annuity side and Cindy heads up the live side. Both of those ladies and their teams work diligently for you. They work tirelessly to help you get commissioned quicker. They'll scrub your apps, submit them on your behalf, do the administrative tracking, and get you the updates on the cases as needed. We do this to ensure that you get commissioned as quickly as possible, and this is a service that we provide to our valuable producers, and how we help grow your business by keeping you in front of clients while our team handles the back office support for you. Firelight eApps, this is a single sign-on at IAMSinc.com. Technology is where the industry is going, and Firelight is a top-notch site streamlining the application process. Most of our carriers are on the eApp platform, so you can go onto one site and submit business. It is COVID-friendly, and some carriers are going to eApp only for some of their product lines, and will also offer you extra commissions for utilizing those eApp platforms. Make sure you ask your sales director before you submit that next piece of business if you could earn more commissions by utilizing Firelight and the eApp process. Utilizing that Firelight platform accelerates the application process substantially. The eApp platform helps you submit business in good order the first time. This also reduces the processing time of your business and helps get you paid quicker. As I mentioned earlier, this is a single sign-on at IAMSinc.com. We've integrated our business with Firelight so you can have the most efficient and effective way to submit business here. All right, we do have a full in-house creative team that can help you and your practice. A lot of the items are turnkey and available for you. We can simply impose your contact information, your business logos onto it. Speaking of your logos, agency solutions are something that we are very good at. And if you haven't created a full customized brand for you, definitely give us a call. This is going to assist you with name recognition, which grows your natural market organically. We can get your logo designed and imposed on business cards, brochures, and stationery. Lastly, what we're hearing from our advisors that we work with is people are looking for those digital marketing solutions. These include websites, social media marketing, email marketing, and much more. The internet and social media sites are where the overwhelming majority of prospects go to for information. Making sure that you're accessible and represented in those marketing lanes is beneficial to growing your business. Give myself or one of our sales directors a call when this webinar concludes. We can talk to you about how IAMS Creative can help you and your practice. Our website is a great tool for our producers to use, and another reason to work with us over here at IAMS. Once you're contracted with us, you have full access to everything you see on this slide and so much more here at IAMSinc.com. If you haven't registered for the website, it is very simple to do. So when we're done, go ahead and create that login and get on the hop on there. If you do need assistance with how to navigate the website, Beth Rickliffs and myself actually did a webinar last week on that, so you can go on to IAMS or go onto YouTube and search IAMS Inc., and then you'll be able to see that webinar on our website. If you do want me to just send you that link directly, you can put your name in that questions list, and I'll get that sent over to you right now. We founded IAMS Wealth over 5 years ago now. What we've done is grow this division very organically. We've helped advisors become IARs and pass the Series 65 at a very successful rate. Once we have you registered, we'll bring great value to your practice with an incredibly competitive fee structure for both you and your clientele. This is a great option for you. We have great technology and investment platforms as well. This has been a major growth sector of our business, and assets under management could be a major growth sector for you if it isn't already in your toolbox. All right, we did host our, I think it was 5th Annuity and Life Insurance Academy this past August. Had a great opportunity. We do cover all of the expenses for the agents coming out to these. We have room for about 30 to 40 agents, and we add a tremendous amount of value. In this last one, we had 18 different presenters come out and speak. They go over top marketing strategies, advanced strategies for both life insurance and annuities, and a lot more. Again, we do cover your costs, so if you'd like to learn more about that, definitely respond back to this first poll. I'm going to go ahead and pop it out here. And that is, would you like some more information about our next Life Insurance and Marketing Academy. So if everybody could respond back to that one real quick, I would appreciate it. Again, we do cover all your costs, add a ton of value, and it's for those experienced agents that are looking to add some, what I'd say, fuel to their fire and really grow and develop. Just a couple more seconds on that poll, and I'm going to go ahead and get it closed down. All right, thanks everybody. Appreciate the participation. So we've actually got Chris Conroy and a few of the folks still out at Park City for this qualification trip. Going out there, we had Steve, Curtis, and a bunch of the team out there last week. I'm sure Jared's going to talk to you about the producer trip and rewards that they have over there with Market Synergy Group. But working with us over here at IAMS is another way to also earn these production trips. We are in the middle of our qualification for the Kiwi Islands. This does end on the 31st of 2023, and then I'm sure we'll start another qualification period after that. All right, so last here, before I kick this over to Jared, definitely like and follow us on Facebook and LinkedIn. We've got a lot of great information out there, and we post on that daily. Well, not necessarily daily, but there's always going to be something fresh out there for you to take a peek at. So with that, I'm going to go ahead and change presenters. So Jared, get ready. You are up, my friend, and here you go.
Sounds great. Let me know if you can see my screen accurately. And
I can see you. Well, yep, now we're looking good.
Good. All right, well, we'll get started. Thanks, Tim, for the introduction. As Tim mentioned, Jared Anderson with Market Synergy Group. What we're going to do today is spend about 10 or 15 minutes on, I can't say new necessarily, but newer product and company that we work with, Aspida. But just a quick commercial in regards to Market Synergy Group and who we are and what it is that we do. We are a product development distribution company that works exclusively with handpicked IMOs across the country. We have relationships with 4 different insurance carriers, Corebridge Financial, formerly AIG, Aspida, Brighthouse Financial, and the Standard. So we've developed products that we see best fit for the marketplace. Been doing it for about 11 years now, and IAMS has been one of our partners from day one. So happy to be here on this webinar with you guys and walk you through our newest release of product with Aspida. So it's important for me to cover a couple things in regards to who Aspida is and a little bit on their background. A- rating. They were founded in 2021 by a collective vision of industry professionals with several years of combined insurance experience. As mentioned, A-, pretty rare to see a brand new company come out with such a high rating, but fortunate enough to have the backing of Ares Capital Management or Ares Management Corporation as their parent company, which has helped us tremendously in this new launch of this insurance solution that we bring to the table to our group of IMO partners, IAMS obviously being one of them. So really the most important thing that I want to point out to you all here is what you can expect from Aspida. We're in an environment today where we're seeing record number of sales across the board from insurance companies, whether that be your general top 5 that you see year in and year out, or even some newer carriers that are coming to the table. And quite frankly, what this has done is caused a little bit of an issue from a processing standpoint for you, the advisor. It's put you in a position where you're, oftentimes will have difficulties getting business taken care of and issued and pushed through the pipeline. So where Aspida is different is their technology. I know Tim talked previously about e-apps and kind of the direction the industry is going. What Aspida did from day one when we launched this product on November 7th of 2022 is required that an e-app process be done in its entirety. So there is no paper option. They've been incredibly ahead of pace, so to speak, from a technology standpoint, and put themselves in position to be what I would argue to be the easiest carrier in our entire industry to do business with. So it is a homegrown, something they've developed, their own e-app process, a very simple procedure to get through. And I just want to share some of these statistics with you as we surpass over $2 billion in business since we first launched with them last summer. Quite frankly, making it one of the fastest growing or fastest starting insurance companies that I've certainly seen in the last 20 years. But The fastest EAP was actually issued in less than 29 seconds. 91% of the EFT were issued within 24 hours. Because of their simplicity that they've built around their EAP process, 70% of the apps are submitted are in good order. Commissions are paid daily, and then 99% of the business tasks are completed in one day. As mentioned, through June, obviously we need to update this slide a little bit, but $1.6 billion in issued premium. So a huge start to an incredible company. And for you, the advisor, I highly recommend you take a look at how efficient and simple it is to do an app through this process that they've created. They oftentimes call themselves a technology company issuing insurance business. And quite frankly, that's what we're missing in this space. I don't want to pick on any other carriers, but generally speaking, most of them are a little bit more archaic, and it just becomes a difficult process for you as the advisor and a little bit of a nuisance to try and get business issued. That's not the case here. One thing that they're working on for a 2024 release is what they refer to as instant commission. So this is a true story. These stories are happening every single day, and it's, just to be fair and clear, it's cash with application. We've had agents get contracted in the morning, in the afternoon had a meeting, cash with application for MYGA, go through the entire process. And how it works is once you hit submit, you're automatically sent a copy of that contract or of that policy, as is the consumer, and the advisor was paid within the next day. So from contract to commission has been less than a day in some situations in the very beginning when we were first starting this. If you think about efficiency and how you guys as advisors are incredibly busy, I certainly know that, talk with advisors every single day, but what that takes away from your plate is substantial and certainly a game changer from what we've heard from some of the advisors that have really taken off, excuse me, and started doing business with us from Aspida. In addition to having it, what I would argue is the most impressive platform and system and new business processes in place, obviously we have to have an incredibly competitive product for the consumer. And we spend a lot of time on that as well. If you think about all the things that I just talked about, there's essentially no paper that comes into the office at Aspida. As mentioned in the first slide, they started in 2021, so there's no legacy business that they're working with. They're backed by one of the largest private equity firms in the world. So they have all the everything that they need in order to move in this fashion. But we knew it was important to have something that was competitive from a product standpoint as well. So we're going to talk briefly about the products. We'll talk about the incentives that they have, and then I'll turn it back over to Tim for any questions that you may have. It's very simple. The Synergy Choice Max, we have two different options for you as the advisor or for your clients, a 5-year contract or a 10-year contract. Crediting strategies are Citi, Goldman Sachs, and S&P 500. We'll talk briefly about those. We do have buy-up rates. It's something we're looking at taking away, quite frankly. Buy-up rates are something that were incredibly popular when interest rates were substantially lower. Consumer pays a little bit, or pays a fee in order to get a little bit higher rate. We haven't seen a ton of allocation there, so there's a potential that will change. But a simple withdrawal schedule on the bottom, just to go through all the details with you. Very common within the industry, very familiar with how these products work, but I do want to cover all of these things. The last key down there is the bailout feature, which I think is important to point out. I would say over the last 12 to 18 months, the majority of the business that I've seen has started to float more towards S&P caps due to the competitiveness of the marketplace. One of the things that was important to us as a product development company is we want to have a bailout feature. We want these advisors to know that you're here for the long run. So they've put that on the S&P 500, and that will reflect in the rates here in just a moment. Pretty common within the annuity space on the FIAs, nursing home waivers, terminal illness waivers, death benefit is contract value up to the date of death. Oftentimes we'll find carriers that will go back to previous contract anniversary. This one is actually up to the date of death, which is nice, and takes all the plan types that we would normally see. In addition, the Synergy Choice Bonus is what I would refer to as our third option, the Synergy Choice Max being an accumulation only product with 5 and 10-year options, but we also have a bonus version on a 10-year chassis. Same features, same crediting strategies, all of that is the same thing. Same thing in regards to the death benefit as well. So to skip through here, this is fairly short. State approvals is obviously important to point out. California is obviously an incredibly large state that we're working incredibly hard on. I think Connecticut is approved at this point, so this one is a little bit older of a map. So if you happen to be in Connecticut, we do have that available. So no issues in those regards. We're anticipating California in the next 30 to 60 days is what I continue to hear. Sounds as if everything is approved and we're in a position to launch it. We just have to finalize some of the marketing materials. And at that point, we'll be in every single state except for the state of New York, which puts us in a pretty competitive position. You know, oftentimes we'll find different state variations out there as well, where a carrier has one product in Texas, but a different one in Kansas as an example. And that is not the case with what we have with the Synergy Choice Max and the Synergy Choice Bonus. Okay. Crediting strategies, obviously it's important for us to talk about those, what your client can receive. As I mentioned, we have a city index as well as Goldman Sachs and the S&P 500, which seem to be, you know, we see what I would refer to as a pretty good mix of what we call optimal allocation. So our recommendation through the research that we've done here at Market Synergy is to never put 100% of the client's assets into any one crediting strategy, whether that be the city index or the Goldman or the S&P for that matter. Our design behind this and our thought process in adding these two indexes was to make them different so they work in different economic environments. So the city ARIA index is 100% equity, allocates monthly to the best performing of two different ESG underlyings. It has a volatility target of 20%. So what does that mean to you as the advisor and certainly the client? Oftentimes volatility targets are in the single digits, and ultimately what that means is how much of this will actually be allocated to equities, and in this case it's 100%. I couldn't tell you within 100 how many different vol control indices there are out there, but oftentimes what I've seen is a lot of the design comes around how will this perform from an illustration standpoint. And you know, quite frankly, a lot of these are using fixed income as one of their components, as a big component, and they have the luxury of the recent bond run that we had that is making the illustrated numbers look substantially better than what I would argue they can perform at going forward. The Goldman Sachs is a lower volatility target strategy. Again, we did that by design to have different economic environments work for these specific indexes. The difference, I think, with the Goldman Sachs index is using the well-studied market anomalies to drive the dynamic rebalancing between futures, NASDAQ futures, and Treasury futures. So it's kind of a futures play. In addition, it has TrueVol technology. If you haven't heard of TrueVol technology, I highly suggest you look into that. Salt Financial came out with what they refer to as TrueVol technology. And essentially what that is if you think about this, markets open at 9:30 Eastern every single day. 99.9% of the vol control indexes will say, okay, well, I'll use S&P as an example. S&P opens at 3,000 at 9:30 in the morning. Sometime in the morning, a jobs report comes out that causes it to jump up to the positive. Now we're at 3,100, 3,200, whatever the number may be. Things are going well. After lunch, there's something with interest rates rising and it drops down to 2,900. And we see that fluctuation every once in a while in a day. But ultimately it closes at 3,000 at the end of the market close. What 99.9% of vol control indices do is say, okay, what was the volatility for today in the market? Well, it started at 3,000 and it ended at 3,000. It looks like it was zero. What TrueVol technology does is picks that up throughout the day to help them determine how to allocate going forward, because it catches on to trends, which is tremendously important if you think about it. And quite frankly, what it does is it ultimately brings 1 to 2% on an annualized basis more in return for the consumer for those indexes that have TrueVol technology. So we're firm believers. We think it's something that all products will have in the next couple of years. I don't know if Tim remembers this, but our first product through Bright House Financial had it probably a year and a half ago, and we talked about it pretty heavily there as well. And it's been a tremendous success. It's helped out tremendously on those specific vol control indexes that have the TrueVol technology. So a very important piece to add, and we're obviously firm believers on how that works. And then of course the S&P 500, the best single gauge, widely regarded as the best single gauge of US large caps. It's the one that every consumer knows. It's the one that you as advisors certainly feel comfortable with. My argument is always that I think it's important to allocate a little bit into each one of these indexes. If you're a big fan of the S&P 500, as is your client, I completely understand, but it's also important to point out that there's different indexes in there that can potentially work in different economic environments, and we refer to that as our optimal allocation. Different crediting strategies available on the max. It's very similar to the bonus as well, but as you can see, we have the S&P 500 with participation rates and caps, as well as buy-up options. Same thing with the Citi and the Goldman Sachs as well. Just a quick snapshot of the most recent rates as of July 31st here. As you can see there, our 10-year product has 11% S&P Cap. This is the non-bonus version, and our 5-year is at 10.25. It's interesting to me to see kind of the flow of business, because we've seen a tremendous amount being allocated to the 5-year product, because quite frankly, as advisors and in this space, we're not exactly sure where interest rates are going. So a lot of advisors have said a 5-year option with a 10.25 cap on the S&P 500, or even a 4.25 fixed account, is something that I'm very interested in to potentially see the direction this market goes. I have the ability to reposition that client in a short time frame, and hopefully things will be better, but I just don't know if they're going up or down. It's just one of those weird situations in our economy where people are starting to gravitate more towards the shorter term contracts, and we've seen a tremendous amount of allocation there. As you can see with the Goldman Sachs index, you get more than 200% participation. It is the lower volatility target with the fixed income component, which can work in all sorts of different economic environments. And on the 10-year product, you get 100% of the Citi RE index with no cap. And as I mentioned, that one is a 20% volatility target that is 100% equity exposure, which is really hard to find in this vol control world. So that one has been performing incredibly well. I saw my report this morning. It's up 13.5% year to date. We anticipate some pretty heavy allocations that direction due to it being really good in this type of economic environment. Now, who's to say if it's going to work next year? And that's why we're firm believers in what we oftentimes refer to as our optimal allocation. Quick snapshot of the rates for the 10-year bonus product. I would argue that an 8% cap with a 10% bonus is something that is really competitive to today's marketplace as well. And as mentioned, we've seen a lot of allocations there. That's probably our most heavily allocated, that 1-year cap version. But again, we're starting to see bigger flows into the Citi RE index, and then kind of as a protection mechanism into the Goldman Sachs Grand Prix index as well, which is also performing at a pretty good rate for a 5% volatility target type product. I mentioned to you earlier that we do a lot of market research, and we try and come up with solutions for you, the advisor, on what makes the most sense. Reach out to Tim or any of the other sales associates at IAMS. We put together pieces, what we, as I mentioned, refer to as our optimal allocation. For us, it's how can we get the most possible return for that consumer, but also take out situations in which we potentially run into a year where we have to have that tough conversation because they got no credits. And I would tell you that, I've seen this over the past 22 plus years that I've been in this business. There's been situations where S&P 500 may be up 5 to 7%. And with these newer vol control strategies, your client potentially could have a zero, and then vice versa. It could be situations where the S&P is down, but had you allocated them to one of these vol control strategies, they may have had a 3 to 4% return. So it's very important for us. We've done all the research to help determine how you can best allocate based on past performance. Again, that's not indicative of what's happening in the future, as we fully understand, but it's very important for us to focus this way to say, hey, how can we maximize the return opportunity, but also take away some of that risk? So this piece is available to each and every one of you through your marketer at IAMS. So please reach out to them and ask any questions that you have. In addition to the great line of fixed index annuities, we also have MYGAs. So the Synergy Choice MYGA rates are listed, as you can see there on the right. Our most popular is the 3 and 5 year at 5.25 and 5.35. Very important, having an A- rating for us to be talking specifically about these MYGAs. You as an advisor, as I mentioned in the very beginning, this is where we see a lot of same-day issue stuff, where a consumer comes in and they've got $100,000 in a CD, or it's coming due, or it's in a savings account. We literally click the buttons through the EAP process, and we had to, it's kind of a funny story, it's kind of not, but we had to put a warning label on the EAP system, because the second you click submit, they're trying to draw those funds directly from the account. We were getting insufficient funds responses back, because as an advisor, I think a lot of you probably expected that it would take a day or two, but it doesn't. They're literally that fast. Actually, one of mine's his top guys that's on a lot of their panels had written policy with us and had completed the application at 6 o'clock Mountain Time, and it called me, and the next morning called me to let me know that he had already been paid. So that's how quickly that process works, and that's where we've seen a ton of business rolling through. The MYGA business is going to be up, I don't know, I couldn't tell you by the end of the year, 100% year over year. People are flocking to safety, and I think at this point our 3 and 5 year rate is the highest rate for an A-rated carrier, which is incredibly important when it comes to MYGAs, in my opinion. We've seen quite a bit into the 2 year as well, and quite frankly, not a bunch in the 7 year. I think back to what I said earlier, people trying to figure out a home for that shorter term investment to try and figure out which direction we think the economy is potentially going. We found a lot of business flowing into that, and as mentioned, the 3 and 5 year happened to be our most popular. So a couple of things I want to share, then I'll turn it back to Tim to answer any questions. Commissions, obviously you guys need to get paid. As you can see, we'll focus on the FIAs first here. The bonus and the 10-year product are the same. So 4.5% commission on the 5-year product, $675 on the 10 for both the bonus and non-bonus version. That is up to age 75. At 76, they do drop. Our 10-year non-bonus product writes all the way up to age 90. Again, you know, people are living longer. You guys are probably meeting with clients that are in their 80s. So we have options there as well. The bonus does stop at age 80, and then there's a trail that you can see that's listed on there as well. In addition to the 675 street on the 10-year product and the 450 on the 5, we do have a commission bonus plan for you, the advisor. Okay, let's focus on the right side, the 10-year. At $2 million, you as the advisor will receive 50 basis points retro back to $1. Once you reach 3 million, it's 100 basis points, and at 6 million, you get 150. So to simplify that, at $6 million in 10-year production, you're making 8.25. As you can see, the left column there, the 5-year is half. So if we look at a $6 million plus producing advisor, 525 for $6 million in production or more, which is incredibly competitive in the marketplace today. So again, we've seen a lot of business flow in that way as well. Tim mentioned that we have a trip. We will be doing a trip. The qualification period ends December 31st of this year. So we started this on November 7th. It is the top 25 in FIA only production to the Four Seasons in Maui. There is a $5 million there's a $5 million minimum for qualification. I will tell you that, as mentioned before, we've had a tremendous amount of success with this product. I think number 31 is at 5 million. We weren't sure if we would run into any issues there or not. We're new to this with Aspida. We don't know what next year's trip will look like, if we'll open it up to a dollar amount. We're trying to limit the number of people, but there is a trip available for those larger producers that are looking to get away and spend some time with their loved ones. We have that option there, and anticipating that to be a fantastic time. Obviously, with everything that's going on with Maui, there's an outside chance that there's a change of location there. We just don't know at this point, but the Four Seasons in Maui is considered to be one of the better properties in the entire United States, so we're incredibly excited about that opportunity. So I guess with that, Tim, I'll wrap it up by saying, you know, we've launched on November 7th of 2022. We've done over $2 billion in submitted business. We have the easiest, most efficient processing for the advisor, in addition to an incredibly competitive product that advisors are really taking a liking to due to its simplicity. The one thing I did fail to mention is we do have that bailout rate on the S&P 500 at 5%. So, you know, as an A- rated company and the backing of Ares Capital Management, they wanted to make sure that everyone knew they were in business and in business to stay a long time. So the way that bailout rate works, if the S&P cap on an existing policy ever drops to 5% or below, the policy becomes automatically liquid and the client can walk away, and they don't have to have anything allocated to that crediting strategy. So just a show of commitment from Aspida, which is very important, and that's a piece that we added kind of last minute that I wanted to point out and kind of failed to mention, but incredibly excited about this opportunity. Hopefully you guys are as well. Tim can run you illustrations. We can get you all the marketing material, everything that you need to see, but please feel free to reach out to Tim or myself with any questions that you have. And with that, Tim, I'll turn it back over to you and see if we can answer anything.
Awesome. Well, thank you very much, Jared. I really appreciate that. I do have another poll here, and this is, would you like more information on Aspida's annuity products? So I've got that going right now. I don't show any questions here, so I think everybody pretty much understands a phenomenal customer service. You guys have your own EAP platform, which provides you to own that process from start to finish. Great rates, caps, and features. And then I'm glad you talked about that commission bonus and the trip, and then the bailout there at the end. I was going to ask you to go over that bailout, but that bailout to me is what a lot of clients are looking at. Is, you know, they've been burned on those renewal rates before, and so that added extra security there, I think, is really attractive to agents and clients out there across the nation. So, Jared, I do appreciate everything. There hasn't been any other questions that have popped up. So, everybody, thank you very much for your time. We will send you out some information there if you clicked on that for Aspida and get you a link to the webinar. Really appreciate it, everybody. Have a great day. Bye now.